Hello, in today's programme, will the face-to-face guidance service for people with pension pots be up and running with quality advice by April the 6th? And as the euro plummets and the Swiss franc rises, what does it mean for holidays and expats? €1 trillion will be rolling off virtual printing presses over the next 18 months as the European Central Bank embarks on a major programme of quantitative easing, magicking up money from nowhere to stimulate the Eurozone economy, which has negative inflation and modest growth. The euro fell another 2% against the pound as a result, and it was the latest blow to the single currency. Last week, the unexpected revaluation of the Swiss franc led to a similar, maybe slightly bigger fall. The result is the euro's at a 7-year low against the pound. It'll cost you barely 75 pence to buy one now on the official markets. Not that long ago, it was 88 pence. Well, that's good news for those visiting Europe. With me is Robin Haynes. He's Managing Director of Currency Index. Robin Haynes, good news if you're off to France or Italy or indeed Lithuania. But who will the big winners be?
Yes, good afternoon, Paul. Well, this all started about 10 days ago, as you say, when the Swiss National Bank decided to reverse their policy that's been keeping the Swiss franc so cheap.
It was pegged to the euro, wasn't it?
Indeed, yes, although you can't really decide to peg your currencies. They've been selling Swiss francs for the last 3 years and reversed that policy 10 days ago. So rather like releasing a balloon that's been held under the water, the Swiss franc made a bid for freedom, appreciated in value incredibly quickly, and the ripples from that have been felt for all currencies. So, yes.
A nice analogy.
Thank you.
And, of course, if you're going to one of these countries for holidays, it might be a bit cheaper. It's probably worth thinking about. But for some people, it could mean a lot of money, couldn't it?
Well, of course. I mean, for your holiday money, as you rightly say, if you're going to the Eurozone, your money is now going 6% further than it was a couple of weeks ago if you're from the UK. Unfortunately, if you're going for perhaps a half-term ski break in Switzerland, you'll be paying 16% more for everything than you were a couple of weeks ago. But aside from holiday money, of course, if you are moving larger amounts, if you're perhaps a British expat living in Europe or indeed Switzerland, or if you're moving larger amounts to buy a property or other goods to and from the Eurozone, then these numbers really do get very serious for you.
Yes, and I mean, 450,000 people draw a UK state pension in Europe, the Eurozone. It's good news for them, and I think a few tens of thousands in Switzerland, bad news for them. And what about buying property or indeed selling property? How do you manage that large amount of exchange?
Well, yes, that's certainly something people tend to leave to the last minute when you're doing a large transaction. But what people don't often realise is that you can fix exchange rates in advance, much like, for example, you fix your mortgage rate to avoid any adverse movements in interest rates. You can also fix your exchange rate to avoid any adverse movements and volatility that we've seen in the last couple of weeks. So for any larger transactions or indeed regular transactions such as moving your pension abroad, it's certainly worth speaking to a currency broker and making sure that you know all the options that are open to you.
And if people who are going abroad for a holiday, perhaps, what's the best destination as far as exchange rates are concerned?
Well, anywhere in the Eurozone, of course, is a little bit cheaper than people may have been expecting. I'm not sure I'd recommend Athens this weekend with the elections going on there. And, of course, unfortunately, for those people going to Switzerland, they are paying a little bit more.
Indeed. And you mentioned Athens and Greece, and, of course, it's possible that an austerity party will be elected this weekend, Syriza. What effect will that have on the euro? And what is the sort of future prospect for the euro, briefly, if you would?
Yes, of course. Well, I'm afraid I think there is more volatility to come. Syriza may well get elected. They may cause Greece to default on its debt payments. There may be a Greek exit from the Eurozone later this year. We have the UK elections coming up as well. And the Danish krone are also in trouble with the central bank there struggling to keep their currency pegged against the euro too. So plenty coming.
More volatility and lots of business for you. Robin Haynes of Currency Index.